Okay, let's dive in. We're seeing something pretty significant, a real shift in global commercial real estate investment. There's this major flow of U.S. money, and it seems very focused on one particular place right now. So our mission today is to really get into this data from BNP Paribas. It's showing U.S. investors snapping up London commercial property faster than they have in, what, 8 years? Since late 2015. We need to figure out why London and, why this sudden surge.
Yeah, and it's important to set the scene right. Globally, commercial property values, well, they've really plunged. You've got soaring borrowing costs, plus offices still aren't exactly full post-pandemic.
Yeah.
The U.S. market, for instance, is definitely still wrestling with those problems quite a bit. But what's really interesting here, and what the data suggests, is the U.K. market seems to be showing some early signs of recovery. It's creating this divergence that you just aren't seeing in the States yet.
And the sheer amount of money involved suggests this isn't just like a minor trend. We're talking $2.4 billion, about 1.9 billion pounds spent by U.S. investors in London just in the first quarter of this year. And the key thing is that's a six-fold increase compared to the same time last year, a huge jump.
That six-fold figure is pretty staggering for a single quarter. And
Yeah.
it's not just limited to London, although London is grabbing headlines. If you look UK-wide, the total U.S. spend hit $3.9 billion. That's the highest it's been since early 2022. So the money's really moving across the pond.
Yeah, and you can see it in some of these big high-profile deals, like MCR Hotels buying the BT Tower for 275 million pounds. That's iconic.
Yeah.
And they're planning to turn that old telecoms tower into a luxury hotel. Plus, you had Elliott Management and Oval Real Estate picking up a West End portfolio for 300 million pounds.
Exactly. These aren't small bets. They signal real confidence. So this brings us to the why. Why is this happening now? BNP Paribas Real Estate points to sort of three main things. First, and maybe simplest, is the currency play. You've got a stronger dollar against the pound right now,
Right.
which just makes UK assets fundamentally cheaper for buyers holding dollars. Classic arbitrage, really. Second, they mentioned Britain offering more appealing leasing fundamentals.
Okay, let's just quickly unpack that for listeners. Appealing leasing fundamentals, that basically means things like lower office vacancy rates compared to elsewhere, maybe better prospects for rent growth.
Precisely. The UK seems, well, maybe a bit further ahead in getting occupancy rates stabilized compared to the US market right now.
Okay, I get that, but isn't there maybe more risk if the UK market is, like, further along? Why pick the UK now instead of waiting for things to maybe bottom out back home in the US? Are they just chasing returns?
That's a fair question.
Yeah.
And it leads right into the third driver, which might be the most telling one. It's the contrast with the U.S. domestic market itself. The U.S. is still, kind of bogged down. You've got interest rates that are proving sticky. The return to office pace is slower than many hoped. And the source material we looked at explicitly mentioned that the significant pre-election political uncertainty in the U.S. is certainly at play here. It's potentially pushing capital overseas, seeking maybe a bit more stability.
Okay. So it's a push out of the U.S. as much as a pull towards the U.K. then. Makes sense. Fergus Keane, quoted in the research, seemed to confirm that. He said this positive uplift tells us U.S. capital is firmly back in the market. They're seeing, what, a better risk-reward balance in the UK right now?
I think that's a good way to put it, connect the dots. And it really doesn't look like just a blip based on one factor. It feels more structural. It's about relative market health. The strong dollar helps, of course, but also perceived risk. Investors seem to be viewing the UK as having, perhaps, already navigated the worst of this particular cycle, whereas the US still faces quite a bit of uncertainty.
So looking ahead then, what does this signal? We saw separate research from Knight Frank suggesting Britain is set to be the biggest target for U.S. overseas real estate investment. They're estimating something like $13 billion lined up, ready to be deployed into the UK. That's up from $10 billion just last year. Which leaves us with a big question, doesn't it? Is this trend going to keep accelerating as even more money follows? Or are we seeing a kind of peak before the U.S. market eventually stabilizes and starts pulling that capital back? Definitely something for you to keep an eye on as you watch where global money moves this year.